Well, looking at the fourth quarter, it was a beat on earnings and revenue. Earnings coming in on an adjusted basis at $1.80 per share versus $1.53 analysts were looking for. Revenue was $13.52 billion, ahead of the $13.16 billion that analysts were looking for. For 2022, the sales outlook looks like it's coming in ahead of expectations, $56.1 billion to $57.6 billion. However, adjusted EPS giving a range of $7.12 to $7.27 a share looks 2 cents shy of what analysts were looking for at $7.29. The company also slightly reducing the top end of its forecast for molnupiravir, its COVID-19 drug, now looking at $5 to $6 billion in sales in 2022 for that drug. They had previously forecast up to $7 billion there. A lot to dig into here, and nobody better to do it with than Robert Davis, the CEO of Merck. He joins us now. Rob, thanks for being with us this morning, seconds after your release crossed the wire. Tell us about the drivers of the quarter for you.
Well, thanks for having me, Meg. You know, as you pointed out, while it was a challenging year in 2021 for all of us, I'm really proud of what we accomplished at Merck, and really we had such a strong year in terms of growth. As you pointed out, 24% growth in the quarter, 17% growth in sales for the full year. So really the business delivered, and if you look at it, it really continues to be the strength of what we see in our oncology portfolio as we continue to deepen the portfolio, moving into earlier lines of therapy and continuing to expand the indications and the reach of Keytruda, which is just a phenomenal drug, a foundational treatment for cancer and making a difference in so many people's lives. And then continued strength in our vaccines business led by Gardasil. Our animal health business continues to deliver as well. So across the board, all of our growth drivers are delivering, and we really made a lot of advancements in our pipeline as well. So all in all, I feel very good about how we're coming out of 2021 with great momentum as we go into 2022.
And looking at a few of those major drugs, it looks like Keytruda, even though it grew a lot during the quarter, might have been slightly light of analyst expectations. Is that what you're seeing too? And what drove that? Beyond that, Gardasil looks like quite a beat in terms of analyst expectations, coming in about $100 million ahead of what they might have been looking for. So what was driving Gardasil's growth?
Yeah, so if you look at Keytruda, basically what you're seeing is overall, Keytruda grew very strongly. It grew 18% as we look at it for the full year, 16% in the quarter. But what we saw really is you look at the mix between U.S. and international, most of the miss you're referring to relative to what was expectation was coming out of the international business, and that really was more due to timing than anything we see in the fundamentals. We had some advanced purchases that were accelerated into the third quarter that affected us, as well as the fact that we had a pretty big impact from foreign exchange. So if you adjust out for those items and look at the underlying trend, the business actually continued to accelerate and grow. So it's really doing well. And then Gardasil is just really a phenomenal story. People recognize more and more across the globe this is a vaccine cancer. Or cancer vaccine, I'm sorry, and as you look at what it can do, that is fueling the growth everywhere, but in particular, we've seen just phenomenal growth in China, where it's now the #1 drug in that market.
Shepard Smith here. Thanks for watching CNBC on YouTube.